Welcome to Starter TV. I'm Vanessa Tyler. CPAs, they're not just for accounting purposes anymore. They can do so much more and make your life so much easier. Here to talk about today's CPAs is Blake Christian. Blake, thank you so much for joining us. Tell us about your journey so far, not your journey here, but your career journey. You've always been one to kind of break the mold.
Right. Well, I grew up in Southern California, and I was a fairly outdoors kid. I rode bikes, I surfed, I played basketball, and I was a good student. But I got a little bit bored when I was in my junior year. I didn't like the regimen, I guess, of high school, and then they also prevented us from advancing to college. That you used to be able to take courses before you graduated, and they stopped that, and so I was a little upset about it, and so I kind of backed off from school, and I even had some doubts about going to college, which horrified my parents. But they talked to me, and I had a very successful great uncle who was a CPA and ended up doing very well, and so they'd always use him as the benchmark and say, "You're so good at math, go to college." And so I said, "I'll try it for 6 weeks." And I loved the flexibility and freedom that I had in college versus the regimen in high school. And I was able to work about 35 hours a week while I was going to school, so I really liked that freedom.
Then you of course, graduated obviously from college and went on for higher degrees, and then you decided to get into your profession. You were with the National Tax Credit Council?
Right. I started as an intern with KPMG, one of the big 8 at the time, now the big 4, and then transitioned to, I actually worked there for 5 years, left as a manager, and went into private industry and worked as a tax director for a Fortune 500 healthcare company. And then they lured me back after about 3 years, and then I ended up being a partner at KPMG, and then kind of got a little disillusioned with, again, the regimen. I didn't like, I like to color outside the lines a little bit, and so ended up jumping ship and to Holthaus, Carlin & Van Trite, where I am now, and with some of my former partners from KPMG.
How is that firm different?
We like to think that we brought the best of what we all learned in the big 8 or the big 4. We have partners from every one of the large firms, and but we left a lot of the bureaucracy and administrative parts of it that weren't really adding client value. So clients get a lot more partner interaction than they got from us when we were in the big 4, and we just have a lot more flexibility and a lot more fun.
There's a software I understand you developed. Would you explain what it is, what it does?
Right. Well, who really gets credit, a University of Southern California professor, he approached me when I was doing a speech on tax credits. For the last 20 years, I've specialized in hiring credits, equipment credits, green credits, and these are peppered throughout the Internal Revenue Code as well as state law. And there are 7,500 what we call location-based credit programs, which just because you have a business in a certain geographic location, you're eligible for these various incentives. And they're very, it can be very lucrative for the client. And we've harvested well over $100 million of credits for clients, and that makes a big impact for them and for us. And so he had developed this database from a multi-year research project on the effectiveness of incentive credit programs. And so he had the whole country GIS'd and down to the address and census tract. And so our software, you would put any address in there, any business address, and it would tell you immediately what federal, state, or local programs may be available to that business. And so he brought me and one of my partners at HCVT into the mix as owners in return for helping him further refine the software as well as to license it to other CPA firms and things. So we had, 500 plus licensees throughout the country. All the big four used it, and we ran that business for about 5 years and used extensively within HCVT, and then ultimately sold it to one of the big four firms who promptly took it off the market, so there was not competition. And they used it internally, so they're making a lot of money off that.
You're working on a book that will advise CPAs how to be more entrepreneurial. Why?
Well, it's just a little bit about my journey and what there's a lot of opportunities that we come across. I mean, I've been doing this for 35 years, and there are literally hundreds, if not thousands, of businesses that you see from startup to sometimes sale, and each one of those is also a potential investment opportunity. Now, again, this is not a situation that if you're a Big Four partner or if you're on the audit side, there's a whole lot of conflicts of interest that you have to be careful of. But for the right opportunities, when you see these companies coming out with a great business plan and they're looking for funds, oftentimes they ask us to help them get funds, and we're on the front line, and so we may make an investment in that. Again, if we end up auditing them, that would be we would be precluded from doing that. But if we're just doing tax work, it's a possibility.
That's a new role, isn't it, for a CPA?
Well, yeah, it happens, but in the course of my career, I've either been a founder or a co-founder in the case of National Tax Credit Group, or an early investor in well over 25 businesses. And right in the last 2 years, I've probably started 6 others, ranging from workforce housing projects that we use shipping containers and convert them to housing, to a headphone company, to a diabetic related distributor.
Are CPAs not as adventurous as they should be, as adventurous as you? And you're basically trying to turn them from being the most boring guy in the room, you say.
Yeah, there's, I know a lot of very cutting edge CPAs and very personable ones, but, I would say probably 80% are pretty textbook, CPA types. They're conservative, they're risk adverse, usually not the best personality, they're not somebody you always invite to the cocktail party, but they're very smart and very analytical. And as I tell new employees and my coworkers, the bar is exceedingly low of what client expectations are in terms of personality and creativity. They know we're great analysts, that we can give them great answers, but they're not expecting much in the way of personality. And so if you can just break that mold a little bit, get out of your comfort zone. And I was a complete wallflower the first 2 years of my career. I would go to a cocktail reception, networking event. I would latch on to one person and spend the whole evening with them because that was comfortable instead of being forced to go talk to somebody else. And people don't believe me, my staff and things, that I was that way, but I only did it because I wanted to get more business cards.
What are the biggest misconceptions that the general public and CPA's own clients have about CPAs?
The biggest area of confusion for many clients and prospects are they assume that CPAs know both the audit world and the tax world, and they also many people think we know the investment world. So they think that we're interchangeable on, as an investment manager. And I tell them, no, I hire competent investment advisors for, my portfolio. I'll do a little bit on my own, but you need expertise. And after a couple of years, almost every CPA is going to specialize, either on the audit side or the tax side. Sometimes you'll have some small firms that they'll wear multiple hats, but usually to get really competent, you want to specialize. And not only in those two disciplines, audit or tax, and it could be consulting, but also industries, and it may be other. I always tell everybody, be super competent in your core, and try and specialize in at least 2 different areas, whether it be, again, industries, or it could be tax credits, or it could be, mergers and acquisitions, but bring something to the table that's very specialized. If you're just a generalist, you're probably not going to make more than the average CPA.
The term CPA-preneur, is that an oxymoron?
It definitely could be, but I think there is so much potential, and I didn't coin the phrase, my editor did, but that is really used to describe somebody that has a deep financial background as a CPA, as their day job, but is using that to, again, be an early investor or a founder of some new business venture. And I think every CPA has that potential. We have, when I say inside information, I'm not saying in a public company context, but I mean, we have, such vision into, a startup company's business plan and the potential. And so it's hard to decide sometimes, what not to invest in. So you'd have to be somewhat discriminating.
And that's very interesting and helpful for the CPA. Talk a little about how that would translate more to the client by having such a CPA-preneur as their own CPA.
Right. Well, I think it gives, getting into the weeds of forming the business, helping write up a business plan, doing projections, knowing all of those steps, and not every one of them goes smoothly. And so if a new client comes in and we've already, been down that path that they're going down, we can tell them, hey, you need to watch out for this, from regulatory agencies, or, you better be careful about this because your customer base may not be what you think it's going to be. And we can also add on, different markets that they may not have thought of, because we've experienced that on other businesses.
Students entering college today, what makes accounting an excellent career path?
The first reaction you get from students, parents, and other influencers of theirs is, oh, that's such a boring career. And I can tell you, it is anything but boring. You get to see, we're the most trusted advisor, so people tell us, clients tell us everything. We know about their kids' relationships, we know about their marriages, we know about, all of their business activities. And, attorneys don't get that, other financial advisors don't get that, but we need to know all of that so that we can give them very detailed tax planning advice. And so I think there is going to be huge continued demand for CPAs. It's a great career, and you don't have to stay with it. It can be a jumping off point, but to have that strong financial foundation gives you carte blanche on career path, as far as I'm concerned.
And I was going to ask you, what kind of leadership roles could it lead to? And you just mentioned you don't have to stay with it, but that foundation could be vital. Right, and a lot of the CEOs, the Fortune 500 are, started off in the accounting suite. And when a company, and often what you see is when a company has some hiccups, they end up looking to the CFO, to move them into the CEO suite because they know all of the, financial goings on and a lot of the operational issues they've been exposed to also. Having a CEO as a CPA may navigate the company from even getting into troubled waters in the beginning.
Right. Yeah. And it's not always that they end up in that suite just, because they're having trouble, but just the normal succession plan. And a couple of notable ones, PepsiCo, their current CEO is, started off in the accounting department and was CFO, and then ended up taking over the CEO suite. And then Warner Brothers Entertainment also, and I actually know Kevin Tsujihara, and he started off as a CPA, had wrote some tax software and ultimately took over the CEO position, beating out two others that probably had deeper creative expertise in filmmaking.
How is technology, which changes every career, changing the financial reporting and analysis profession?
Well, the pace of information flow is just staggering. In the 1900s, it took a century typically to double the information production, and now it's down to 18 months. I actually read something this week that somebody was claiming it was 2 days. I think that one was a stretch, but it's amazing how quickly that's happening. And then on the processing front, now it's down to 18 months, the doubling of computer processing time, and that'll just keep coming down, down, and down. And so there's just so much information out there, and the challenge is sifting through it. It's where do you spend your time, and CPAs play a role in that. And now, say large international public companies, the CFO usually was just kind of the more resigned to looking at cost controls, margins, and things like that. And now with the real-time data that's coming out, hourly internationally, I mean, there's dynamic pricing models, everything. So the CFO and the accounting department can actually get more involved in some of the pricing structures and the revenue side, not just looking at picking up the pieces on the cost side of the P&L.
That's got to help you do your job more efficiently as well.
Right. Again, there's a balance of it's almost information overload now, and so it's the people that are going to distinguish themselves in the financial analytic world are going to be those that spend their time properly, because otherwise you can be hunting down some blind paths and looking at data that may be of no consequence. So it's a little bit of an art form.
Do you think robots, artificial intelligence will replace some percentage of what accountants, CPAs, controllers, CFOs do in the future? This over the last probably 2 to 3 months, this has probably been the headline in the whole business, segment. And I'm one, I might be in the minority, but I just think this is so overblown. Again, manufacturing, yes. A lot of industries. Will it reach into accounting? Absolutely. Bookkeeping, basic things. But things that we do where it's complex tax planning, complex structuring of debt and equity and things, there are so many variables in that. And I know, I mean, you can program a computer to beat, the best chess player in the world and have a lot of variables, but you can't code everything in there. And the other really important piece, what we do, when you're dealing with a business owner or particularly an individual, it's a very personal relationship. And I don't think you're going to feel real comfortable talking to Watson, and telling, him your tax situation. Again, I don't have a very good relationship with Siri, and it may be me, but there's a whole lot of things that don't translate, and so I think it's overblown. Talk about how financial professionals will need to move on from being historians, bean counters, to value providers who'll help their companies' clients make better decisions. And you really kind of talked about that, how sometimes you're giving advice, sometimes because you've seen some of these, what's going on with some of the startups, you could maybe say, hey, watch out for that. That's really valuable especially for a company coming to you just starting up.
First and foremost, the communication between the CPA and the client is key. And so, and it's incumbent upon the CPA to drive some of that outreach. And so I tell all my coworkers, we need to be reaching out. We need to be proactive because our clients are very busy and they're not going to call us, surprisingly, they're not going to call us on every major decision. We'd like to think they will, but they don't. And so they may go out and buy a new boat or a high-end car or something that we could have saved them some grief. And the cost of us unwinding what they've done, some of their bad decisions, is way more costly than if they had called us in the first place. So I've actually reduced to writing, when they should call their CPA to trigger things, if it's going to be a hiring or firing a key employee or buying a large ticket item, either business or personal. Divorce, marriage, a move of their business or personally, all of those things we should be consulted on before they do it. Otherwise, it's going to cost them a lot more after the fact because they don't always have thought through all the decisions.
Excellent point, because oftentimes you're right. As a CPA, you find yourself looking at the receipts after it's already been done,
right,
and trying to figure out from there.
Right, but absolutely, the days of looking through the rearview mirror and expecting to get paid for that is, we have to do that to a certain degree, but the good CPAs and the ones that are really going to be sought after are those that are looking out the windshield and, I'm not saying crystal ball, but, looking out, a year ahead and cautioning people, hey, your growth is going to put some crimps on your line of credit because your receivables are going to outpace, your cash flow. And most bankruptcies are not because companies don't have revenue, it's just because they get upside down on their cash flow.
You talk about frustration in your book with highly intelligent low performers versus less gifted high performers. How do you deal with each type and make them better?
Yeah, well, this is a very personal issue with me, and I'm probably, I've thought about this a lot, and I may not be very fair on this, but from the time I was a kid, I think I've had this bias where, the kids in class that I could tell were really smart, but they were just dialing it in every day. And then the kid in the back that was struggling, but really trying. And I feel the same way at work. It's, some very, very bright people come into this industry, but because of their personalities and their comfort zone and not wanting to get out of the office or mix it up with clients, they don't perform at the level that I know they can. And so I push them, and when they don't perform, I do get pretty frustrated with them. And I always say, I'll take that somebody on my team that will kind of run through doors, for the firm or for me to get a project done. They may not be as smart as the person down the road, but they're going to come in my office before they leave and say, anything else you need, whereas the other person might sneak out and, I don't see them over the weekend and, they're gone.
Yeah. The key section in your book where it's titled When to Call the CPA, and you basically say any life change, call us.
Right. And again, it seems that, most people say, well, geez, wouldn't they do that anyway? But again, they're busy, they're distracted. They figure, oh, I'll talk to them when I'm doing my next quarterly estimate. But we need a lot of that information in real time to have a positive impact on their decision making.
There's a key section in your book where you talk about quality client service, QCS. Right. What does that mean? So
the genesis of that goes back about 12 years, and it was not in a pretty stage of my employee-employer relationship. So I was very frustrated with my managers and principals. They were not, following some suggestions as far as client proactivity and, networking and kind of practice development oriented things. And I kept, I really got to the point of paranoia where I felt like they were undermining me, and they were just, they were all collusion and overriding me. And so then I did divide and conquer, and I pulled them in one at a time, and to try and get the story. Well, what came out of that over the course of a few months was I realized that they weren't undermining me. They really did not understand, because they don't teach this in college. They really didn't, they don't teach it in continuing education within the firm. So I just said, okay, I'm taking a giant step back, and it took me probably a month to write it, because it's probably 8 pages, but I basically went through at every level, and I included admin too, administrative people, and said, okay, what is everybody's role in the firm, including partners? Partners didn't get a pass. So, partners are, the end game of quality control and, the client relationship, but everybody else has a critical role. If you boil it all down, the easiest way to explain it is every level should make the next level up's job easier, and identify issues early, fix them, etc. And the partners, again, we don't get off the hook. The partners is to make our clients' lives easier and anticipate issues before the client brings them up. And we can't do it all the time, but that should be our goal, is to identify those and make their lives easy.
So it was almost a part of company culture. You kind of laid out almost a mission statement and gave people some direction.
Right.
I think maybe a lot of employers don't do that, and kind of people are floundering, trying to figure out where they fit in.
Right, and so I try and make a habit of any new employee, at least within my office or offices, I try and sit down with them in the first month, and I figure that way I can indoctrinate them into at least if it isn't the HCVT, it's the Blake Christian rules of conduct on how to be successful in a CPA firm and have a happy client.
What are some of the rules that you mentioned? Making the person that's next up the chain's job a little easier. Kind of try not to leave ends dangling, that kind of thing.
Right, and we identify issues on a client. Maybe they, we've noticed on their mortgage statement that they don't have their residence properly titled. Maybe they have it just in they have it listed as separate property, but they've been married for 10 years, and we know that they've got a sound marriage, and that everything else is joint. Well, if one of them passes away in California, community property state, and it was your sole property, and you passed away, the other party would not get a full step up, or the kids wouldn't. If it was community property, both halves get stepped up, and so that can and we could potentially get sued for that by missing it. And so those are the types of things where we might have to tell the client 2 or 3 times to do that, but we get to the next year and the mortgage statement is still showing just one party's name. We need to remind them. So it's a lot of follow-up. And the other theme is, again, you can always make the right decisions with empathy. If you can put yourself in the client's shoes, you're going to make the right decision on how do you approach them on a sensitive issue. How are you going to, they're busy, but you need information because a due date's coming up. All of those things, again, if you're empathetic, you're going to do a much better job on client service.
What do you see as the biggest challenges and opportunities over the next 24 months for your clients and the business world at large?
Well, I think, clients are getting, and a lot of it has to do with the convenience and technology. I mean, you think of Amazon, Google, FedEx, the ability to 24/7, order things, access information, request things, that has become kind of the new normal as far as I'm concerned, and professional services is no different. And so I think that CPA firms are going, and I think we have a great opportunity to be the kind of the backbone and the depository of everything financial for clients. And my CFO, I don't know if you remember that company back in 1999 at the height of the dot-com era. A bunch of the big four CPAs, some the managing partners and things, came together with technology, and they were going to put together this whole portal and platform for multimillionaires to kind of be a Goldman Sachs but a CPA based firm, and they were going to handle they were going to quarterback, investments and estate planning and income tax planning, personal financial statements. They were going to be a family office set up for worldwide wealthy clients. It didn't work out so well. Their software didn't work out. They got people into tax shelters. But the theory is still, I think, very sound. And I think somebody's going to break through on that and have something. It's got to be super secure though, because if you want to go in there and look at your personal balance sheet, with a couple of encrypted methods, you can do that 24/7. You don't have to always call. And your mortgage statements would be there, your investment statements. I really think that is kind of the next iteration of a CPA firm, is to have everything in one spot. I would love it. I hate going into multiple sites to pull your balance sheet together.
We talked a little bit about changing tax codes, although that's probably way down the line, the way things are, but who knows when there'll be changes in Congress for that. And that's something else you're looking at on the horizon.
Right, and that's a perfect example. I'm still optimistic that we may get at least partial tax reform this year. I'm in a huge minority, but I really think that they will get some passed this year. But it's a great point, because it's so important and that's levels the playing field. You could have somebody, a tax senior that's been in the business for 3 or 4 years, suddenly become the expert. When anytime the law changes, just because I've been in the business 35 years, a 2-year person or a 1-year person can be just as expert as I am, because it's all fresh and they can read the same thing I will, identify ways to plan. So there's huge opportunities. Change is an awesome equalizer for people. So they can get in there, dig in, and become the expert very, very quickly. So I encourage people to do that.
What are the trends that you're seeing with mergers and acquisitions?
In my practice, which is kind of large middle market, closely held businesses, I'm seeing much more strategic purchases where they are focused on some niche or technology that's additive to the existing business. So the buyer is looking and identifying that as something that'll really help their business. And the flaws in M&A, historically, I learned this early on in my career, is that the ones that don't work are those that you've got this, whale swallowing the minnow, and the executive team at the whale is looking at the minnow saying, oh, that poor mismanaged minnow, we are going to bring our magic to bear on that, and we're going to turn them into this great company. But the ones that really work and the real great finds I've found in my career are the ones where they're looking at that minnow and they're saying, wow, that has some great qualities. It's got either some great technology or a great service offering and some a great team, and we can come in there and collaborate and make both entities better. But when it's a cram down and we're gonna rule the roost, it seldom works.
Wow. Wow, that's very interesting. Yeah, because you would think that the other company, maybe the larger company, is kind of helping with back operations, where the smaller company is maybe the creative, and
Exactly.
making the larger company become a little more up to date, and whether it's social media wise or whatever.
Right. When I started in the business, it was, the saying was the large will eat the small, and now it's more the fast will eat the slow. I think it's the quick to market strategically. You can't rush it, but being light on your feet and flexible is the key in business these days, I think.
Your company is involved in a variety of businesses, advising them. Where are you seeing the most activity? Pharmaceuticals?
Actually, pharmaceuticals is down most recently, but we're seeing, we deal with a lot of real estate, so, we see a lot of consolidation there, opportunities, in the development phase, not so much on the residential. And there's a lot of new products, coming out with that. Also, in the energy sector, because it's there's some bargains out there with the oil prices plummeting. That market is very hot. Oil and gas and alternative energy sources, just because there's good buys. That's what we're seeing a lot of, and healthcare also.
We talked about common reasons M&As fail, and you mentioned because of sometimes the attitudes of the larger company.
Right.
Any other reasons that may make an M&A fail?
Well, sometimes the buyer will, egos, are can get in the way, and so sometimes people will be chasing an acquisition just to have a trophy business. They'll overpay, or they'll or it's just not a good strategic purchase. Early on in my career, an oil and gas client that I had, they were a service company to the oil and gas industry, and the owner bought a dry cleaner in Hawaii because he wanted to go to Hawaii. Caused us all sorts of headaches tax-wise, but ultimately we sold it. But you see, some people make decisions for very personal reasons, and they don't always pan out business-wise.
How can leaders avoid these pitfalls? Any advice for leaders?
Well, I think what's important. Again, so much of the success or failure in business is communication, and I'm not going to sit here and say I've been perfect on communication all my career, but to find out, again, empathy comes into play here. To find out what does the seller want, and I've got one right now where it's a woman-owned business. She's got a great business, but she's just tired of running it, and she's got a lot of challenges, and it's a perfect fit strategically. It's a new product offering that can be added on to my clients' existing offerings to the hotel industry, and she also has a niche in the residential, which they're not in right now. So it gives them diversification and integration. And it's perfect because they want her it's a rare instance where it's like, we want her around for the long haul. We want her around for 5-7 years, which isn't always the case. Sometimes it's like 2 years and you're out. And so they really value her input. It's strategic, and they asked, what do you want? So she wants, job security. She wants to recover the $1 million investment she's put into the business, all the blood, sweat, and tears, and and she doesn't want to have to move to another state, and so we can accommodate all that.
Oh, that sounds like a perfect merger and acquisition.
Right. But asking, instead of a cram down, you ask, what does that what does that seller want?
Yeah, because you're saying it doesn't always have to be a bloody situation
Right.
where everyone's kind of pushed out, old employees, the old owner, that kind of thing. There could be a way to make it work.
Right. I was involved in one acquisition where, the CFO, his whole driver was cost reductions, and the marching orders was all senior management is fired at close. And biggest mistake I ever saw, because there was no continuity, it was so hard to get information, and so not a wise move.
What processes should companies follow to conduct effective due diligence during integration and evaluation? Do you have an example to share of a company that did so successfully?
Well, I would start off, and most, selling a business is usually a one-time deal. I mean, there are serial entrepreneurs out there, but in most cases, a business owner, it's his or her one bite at the apple. They built this up and they sell it. They don't often start a new business, or certainly not to the same magnitude of the one they sold. And so it's and this is lost on so many people, but one of the most important parts of the whole process is the letter of intent stage, where you reduce to writing, and again, it's non-binding, but it lays the framework for what the deal is. And here's another situation where clients will occasionally not talk to an attorney or a CPA and sign a letter of intent because they say, and they'll, when we question them, why didn't you ask us? They say, well, it's non-binding. It doesn't matter. But as soon as that seller, in this case, decides that he wants to change one of the terms, the buyer's going to say, well, wait, if you're going to do that, then, I'm going to lower my price, or I'm going to, not pay you interest on that. There's always give and take. So you have to really, that's where the time should really be spent, is on that letter of intent. It's so important, and people miss that.
What are different ways to measure integration success? How do we know that once this is done, it worked?
Most people will look at the financial results, but really it's usually the soft issues. It's, what kind of employee retention did you have? And actually on both sides, because there can be, you can really irritate the buyer's personnel too, if they see that the seller's employees, are getting a sweeter deal, they got upgraded, their benefits package, and now they're seeing less than average raises. So you can lose people on both sides after an acquisition, and so it's really important to look at that. Also, I always try and look at, are there new service offerings? Not just what they bought, but have they collaborated and now expanded either their products or their services as a result of working together. And I think financial results are like 3 or 4 on the list. And what I tell everybody, and I just told somebody this last week that had been working on a huge acquisition model, I said, tell me in a year if any of those economies of scale that have been baked into those projections ever materialize, because they often don't. So sometimes you might get some advertising breaks, or now you have a higher revenue, and so you get some cost reductions, but in most cases they're pie in the sky. They don't always materialize.
What are the critical competencies needed for successful post-merger integration and performance?
Again, I go back to communication, collaboration. Communication is just so important, because the rumor mill, I've seen that take down companies before. The chatter, it's deafening. So the CEO and CFO, HR, they have to have it's almost like having town hall meetings. Well, I actually don't recommend that, but divide and conquer. Get some input. Don't stay ahead of it. Stay
At
ahead of
least
the communication.
emails or something,
Right.
if you don't like the town hall meeting, because people have questions.
Right. It's just amazing, though. They, the natural tendency is to overthink, and again, you can release information in smaller bites and say, hey, we're working on this. You don't have to get too far ahead of it, but if you don't communicate, the employees are going to make up whatever story they want, and that's not always productive for the the executive suite. So you really have to get ahead of it.
We talked about the rise of financial technology and how it's reshaping financial services. Has the technology disruption led financial services firms to rethink their customer and client servicing model?
Yes, I think it's more apparent and impactful on the large publicly traded companies. They're kind of on the leading edge or bleeding edge that we refer to it sometimes, because they have the information systems, they can capitalize on it more, and certainly the big four have changed their approach on those clients. Even the middle market that we serve, definitely efficiency gains. When I first got in the business 35 years ago, KPMG, secretaries would type tax returns. They would type them on an IBM Selectric. And, we didn't have email. Fax were just starting. This is 1980. So it was a whole different world. We didn't, on corporate tax returns, we would not have direct access through the computer to change numbers and things. We would have to give input sheets to an operator who would punch those in and then give us a draft return that was very skeletal. It wasn't even on all the forms. So it's I know 35 years is a long time, but right now you punch a button and you can rerun a return, 5 times.
In fact, you can do it yourself.
Right, absolutely.
I'm thinking about carbon paper and 3-ply.
Oh, yep, the smell of those carbon papers, right?
Yeah, the technology change is amazing everywhere.
Now, what I will say, though, 95% of the technology gains are, absolutely, a blessing to our industry. The negative, though, it's the 24/7 insatiable client expectations in some cases, and even partner expectations of staff and things that we're I'm unfortunately I send emails 24/7, and I don't expect everybody to respond, but it's just I have that stream of consciousness. Here's something that we should do, and get back to me when you can. But that puts a lot of pressure on people if they get that on a Friday night. They, without me, if I don't say I don't need this till Monday, they may think that I need an answer right away.
Well, at least they start thinking about it right then.
Yeah, so, again, when I started, 3 to 4 day turnaround was the client expectation, and now it's more like 3 to 4 hours, and the really demanding clients might be 3 or 4 minutes.
What is the best advice for businesses for tax planning?
Well, again, one of the really overlooked ones that I spend a fair amount of time on the intake of new clients, or if I'm helping somebody set up, is the legal formation of, and so we'll go in a mature business, maybe they've got 5 or 6 businesses, got an LLC here, an S corp, a C corp. They've got everything, and sometimes that can make sense. There's advantages and disadvantages in all the forms of business, and it's very fact specific. And this is where artificial intelligence and robots aren't going to take over, as far as I'm concerned, because there's a whole bunch of follow-up questions that you have to ask about, okay, why was this entity set up, and a whole lot of history that may never get into the artificial intelligence database. So we spend a lot of time, again, on the front end saying, okay, well, you've got that S corp. Again, let's say you bring in a new owner, you don't get a step up of the underlying assets of that, or if somebody dies, again, you're going to get stuck with the historical basis in those assets. That's not a good answer. So sometimes we'll morph it into, as they add on new services and stuff, we'll put that in a new LLC that has more step-up potential and stuff upon a death or a new owner coming in.
What are your top 5 tips to CPAs?
Okay, that would be get out of the box and get more creative. Get out of your comfort zone. Same as last year is not a strategy. It would be to be much more proactive with clients, spend more time on networking and marketing. And I'm going to give you a 6th, and this is a little brutal, but poor performing staff, managers, and partners should be counseled out sooner rather than later, and difficult clients should be counseled out quickly.
Blake, thank you so much, and thank you for watching. I'm Vanessa Tyler. Join us next time on Sartor TV, where business and thought leaders come to share their ideas.